Hello, this is Andy Cates. I'm the head of developed market economics at Nomura, and I'm joined today by Louis Alexander, Nomura's chief US economist. We've just published our extensive global annual economic outlook publication, and that's given us a nice opportunity to briefly discuss some of the key messages for 2018 for the developed economies and for the US and the Eurozone in particular. On the global macroeconomic picture, we are, as a group of economists, pretty upbeat about the outlook for economic growth. We're particularly upbeat about the Eurozone and to a lesser extent the US relative to consensus among the large developed economy areas. And we're pretty positive about India and parts of the ASEAN region in Asia among the emerging bloc. On inflation, we think the markets are probably a little complacent about the upside risks. And certainly think that core inflation in many major economies will climb in the immediate months ahead. And that means as well, against a likely robust backdrop and outlook for growth, the markets are also probably a little complacent about monetary policy. But let me turn now over to Louis and ask him to drill into the US outlook in a bit more detail. Louis, over to you.
Thanks, Andy. I would stress the fact that our outlook for next year really reflects a continuation of some of the trends we've seen in the second half of this year. In particular, we've seen a bit of a pickup in investment, somewhat better evidence of productivity and on the supply side, contributing to strong business contribution to aggregate demand. We've also benefited from strong external demand, which we think we're going to get again in 2018. Consumer looks pretty solid, and then you add to that what I think is going to be a significant fiscal stimulus. Obviously, we're going to get a tax bill that's going to provide some stimulus, but we're expecting further increases in spending as well. So that all creates a pretty decent outlook for aggregate demand. Now, the U.S. economy is close to full employment. It is at or beyond full employment, and we expect it to go further beyond that. We do think that that is going to add to the inflationary pressures that Andy mentioned. We do think core inflation in particular is going to head back up towards the Federal Reserve's target, and that does mean we are going to get more hikes from the Fed going forward. Our expectation is 3 next year, and then some more in 2019. I want to stress the fact that there are some risks to this outlook. Probably the most important one I would highlight is financial conditions. I think our general view is that with a positive outlook globally, we expect financial conditions to continue to be supportive for growth. But if we're going to be wrong, that's probably one of the ways we'll be wrong. Back to you, Andy.
Thank you very much. So let me just say a few words about the Eurozone. I'm also fairly optimistic about the outlook. I think growth and inflation will surprise the consensus, including the ECB, on the upside in 2018. And one of the reasons for that just concerns this optimism that we have about the outlook for the world economy. I think the easy starts of monetary policy, and in particular the easier starts of fiscal policy are underappreciated elements to the Eurozone story. And I think combined with some likely progress on the inflation front, some nudge higher in core inflation rates in the coming months, the ECB will be normalizing its monetary policy a little more quickly than the market is presently expecting. So there's a lot more detail on these views on the Eurozone and the US, as well as, of course, the views of all of our colleagues in economic research in our annual Outlook publication that you can find on the Global Research portal. So please take a look at that. Otherwise, we will speak to you next time. Thanks.